Moving on to RealPage, more of these longer term trends and how they interact with the current market and with interest rates. So we've been following apartment supply metrics ad nauseum. Like Addison said, maybe at the beginning, another week of supply and demand in the multifamily market. But things are changing, and there's always kind of some new nuance. And I think especially right now, when things in the economy are so unpredictable, it's nice to juxtapose that with more longer term trends that you can at least be a little more confident about what's going to happen next, rather than like the squiggly line of whatever the Dow is happening and whatever's happening day to day on that. Right now, what we're looking at here, and this is what RealPage's inherent argument here for the article, is that permits and starts, after sinking down for a while, they may be going up a little bit. They really only have like a couple data points to hang their hat on, so it's very much up in the air. But there could be a general trend of maybe the ship's starting to right itself, maybe supply in terms of the beginnings of projects. So permits happen at the very beginning, not the very beginning, but permits are the first thing that the government at least tracks when you're coming into construction of multifamily buildings. And there may be other things, but that's the one I'm familiar with. That's a common early stage data point for a construction project. And then after that, there's starts that happen a little bit later, and then completions after that. So for both permits and starts, they peaked in about January 2023, and in the trough, or the low point, was about January 2025. It spent 2 years getting down to this point, and the reason is, and I'll bring the chart up again, is this is when interest rates were high. Interest rates had almost peaked by January 2023, but it's interesting to see, and again, I'm talking about the lag time between things, and how during the period of like 2022 to 2023, interest rates were rising, but also construction starts and construction permits were also rising. So there was momentum to this interest in construction, which suggests that they were not just responding to whatever interest rates were. They saw the huge demand and they said, yeah, I know interest rates are getting higher and higher. We're just going to keep building, and we're going to keep these projects moving. Now, by January of 2023, which is about the peak of interest rates anyways, the project started going down. And I think that there's a perfectly good reason for that. It was interest rates, ultimately, interest rates on top of low rent growth, which was starting to emerge in 2023, especially around like March or May or whatever. It really, set in that this is what your rent growth is, and this is, with those kind of projections, maybe it convinced people to build a little bit less. And when I say less, I mean, well, yeah, we had record-setting apartment construction, and we're still on the wake of that wave. But in terms of the permits listed here, the high point was in November 2022 at 663,000 units. And I think that's by quarter. I'm not sure if that's a year-over-year number. But anyways, that was the peak. And just to give you a sense of proportion, we're now about 445. So, maybe it's gone down a third since its peak. And I'm not really quite sure what normal is. It seems like we're approaching what normal is when it comes to apartment supply and demand. My ultimate point is, just to sell this, what was the most interesting is that it does seem like there is about a 6-month lag between interest rates moving. So interest rates start to go up, let's say around February 2022, they start to tick up, and then you don't see a deceleration in starts until, that's November. So that's essentially the peak in starts and permits, and then they start going down. So I don't know. Again, I try to explain it as maybe they were still thrilled about rent growth, but I'm sure that just like there's some momentum to apartment sales, and you want to buy an apartment, well, that's a months long process. There's almost certainly a months long process when you're finding a site to build, or you're deciding to make, these kind of these construction projects. So they're not small things, and that probably speaks to the momentum. But also, maybe they just were that excited, and there was just an overhang of investor interest or of construction interest, where it's like, well, yeah, we could see a little bit. So, in all, though, what has happened in the time since is a period of this stagnation, and there's been lower apartment building, and RealPage ultimately thinks that maybe it has hit bottom. There's reason to perhaps hope that things will start to go up again. But yeah, for both these developer trends and investor sentiment, it is striking to see this similar long-term trends and how they kind of interact with these short-term trends in the economy. And it almost suggests that, like I said earlier, it's like these investors are looking beyond whatever the next week is. They've got 5 years, 10 years, and more to worry about. And so even looking a year ahead, as people are a little nervous of, and we'll see conference board expectations are down for a year ahead. But investors have a 5 year or more plan. Like they're looking long term, and that's going to benefit them probably, as John Chang says, keep your eyes on the horizon. So, and I think that's what they're doing. So that is it's a promising sign, I think, for the multifamily market, especially if these builders are deciding to build because they see health and they see momentum. And I think that there is reason to think that, because RealPage itself is reporting stronger absorption levels, and how demand is exceeding supply for the first time in a long while. So there's a lot of reasons to be optimistic about this market. It's just that the economic certainty does threaten. It's like we're not perfectly shielded from everything now, especially with supply going down. It's not all about supply anymore in the multifamily market. Now it's about job growth and economy and household growth and all these other little things that could be different from market to market, especially for markets that may be still working on their oversupply. They can mean that they're more vulnerable to this economic volatility.